Hey guys, welcome back to the channel. So today we're talking about UK tax allowances and how to legally avoid paying tax here in the UK. Obviously that is important because you need to maximise the money that you can keep to invest further down the pocket. The UK government takes enough tax off us in terms of our earnings and on the things that we buy, so you should be extremely savvy when you have to pay tax on anything that you do and anything that you earn. I'm not saying that you should like hostilely avoid paying tax or do aggressive tax avoidance. All I'm saying is you should follow the exact rules so you minimise the amount of tax that you pay legally. Now today we're going to talk about a few different allowances, a few little different bits and bobs and tips to talk about so you can make the most of the allowances that the government essentially gives you. So without further ado, let's get in there and let's take a look. Hey guys, welcome into the video. So today, as I said, we're talking about tax allowances here in the UK and some legal tax avoidance. So the first thing that we're looking at is individual savings accounts, otherwise known as Icers. There's 4 different types of Icers. If you didn't know that, well now you do. There's cash Icers, stocks and shares Icers, innovative finance Icers and lifetime Icers, and the allowance per year that you can put in is £20,000. That is into each individual account, guys. So there's £80,000 there that you can save into tax free and not have to pay anything on your gains or on your dividends within them. So to open an ISA, there's a few different things that you need to qualify for. You must be over the age of 16 for a cash ISA and over the age of 18 for a stocks and shares or innovative finance ISA, and 18 or over but under the age of 40 for a lifetime ISA. You must also be a resident in the UK. So that is a massive amount of money there that you can save into completely tax free and save an awful lot of money that way. This allowance renews each year, so you get a fresh £20,000 for each one of those ISAs every year. So in 10 years you could save £800,000 completely tax free, and that is just by using ISAs, which is absolutely excellent. The UK tax system sometimes is unfair, but sometimes it is quite fair as well, and this is a fantastic way to save money. The next allowance we are looking at is the junior ISA allowance. Now that allowance is £9,000 a year, and that is for saving into ISAs for your children. So the allowance is £9,000 a year, and that has gone up from £4,300 in year 1920. As a slight quirk of the junior ISA system, 16 and 17 year olds currently get 2 ISA allowances. They can have £9,000 for their junior ISA and £20,000 for their cash adult ISAs as well, which is absolutely fantastic. There's also child trust funds all enjoy a tax-free allowance of £9,000. So that is another £9,000 you can squirrel away completely tax-free. Moving on to the next one, this is your tax on private pension contributions. So you'll only pay tax if you go over this £40,000 limit in a tax year. So that again is £40,000. A lot of people don't earn that in a year, which is completely understandable, but you can pay into that again completely tax free and not have to worry about it. So if you've got anything left in the pot and you've maxed your ISA, this is certainly where I would be putting it if you've got access to it. Your allowance will taper downwards if you're a higher earner, so you'll have a tapered annual allowance in a current tax year if you earn over £200,000 a year. That's not very many people, that's only a couple of % of the population, or an adjusted income of over £240,000 a year. So up until that point, that is another £40,000 stuck away that you can not be taxed on. Our next allowance is the capital gains tax. Now capital gains is paid on when you dispose of an asset, and that is anything that has any sort of value over £12,300 that you've made a gain against. Sometimes this can include property, it can include investments, it can include cryptocurrency, it could even include a fine piece of art if the piece of artwork has gone up over £20,000 or the allowance over £12,300 in value. You will then pay tax there past that. So the allowance is, as I've already mentioned, £12,300. So any investment that you have each year, if it goes up by less than that, no tax to pay. If it goes up by over that and you sell it, and the key thing is you have to sell it. So if you have a large investment in a company that goes up tenfold, and let's say you made £100,000, huge example, but let's say you made £100,000, then you don't have to pay tax on that until you actually sell it. So you can leave that to grow for years and years and years, but obviously your capital gains tax when you eventually come to dispose of that asset or investment will be bigger if you allow it to grow bigger. But that's just something to bear in mind. You only pay the tax when you sell. The next thing that I want to talk about is ways to cut your tax bill, again legitimately, and that is your inheritance tax. So when you sadly pass away, if you're an older person and you're looking into being able to give assets and give money to your loved ones, you can give £3,000 away each year in inheritance tax free. This is known as a gift, and you can give it away and the government won't come chasing you for that money. You can give away £3,000 each year and not have to worry about it at all. So that is well worth bearing in mind going forward, especially when you start to get towards the age where you're considering a will and what's going to happen to your assets when you pass on to a better place, shall we say. The next allowance is UK tax rates. So the personal tax allowance for year 2020 to 2021 was £12,500, and for the year 2021 to 2022 it's £12,570. So this is money that you earn and goes into your pocket that the government will not touch. Granted, £12,570 isn't a lot of money, but it's money that you will earn, £1,000 a month essentially, that is solely yours to keep, and the government will not tax you on it. This income limit does disappear or start dwindling down if you earn over £100,000. You will lose £1 of your personal allowance because you are seen as essentially a higher earner in society. And if I was earning £100,000 a year or over, I don't think I would be too fussed about that. Lastly, your next tax to take advantage of your allowance is the dividend allowance. So you can earn up to £2,000 a year in dividends from your investing account and not have to worry about paying tax on them at all. If these shares are in an Icer, then you could earn £8,000 a year from that Icer and not have to pay a single penny in tax. This is only in regular invest accounts only, and you can earn up to £2,000 through them and still not pay a penny. And the allowance from 2020 to 2021 was £2,000, and it was dwindled down from April 2017 to 2018 when it used to be £5,000. So the government took a little bit of a tax rate there. There's no reason to suggest that this is going to change at the moment. So £2,000 is what I would work towards. So make sure that you get your investments and your ducks in a row to make sure that you don't breach that, and any serious dividend stocks are held in an Icer separately. £2,000 is more than enough allowance, especially if you're investing in growth companies, to make sure that you don't have to pay tax on that side of things. If you have to pay capital gains tax, then of course that happens, but that is only when you dispose of. This is on dividends earned. So if you earned over £2,000 in a year, you would have to pay tax no matter what. So guys, by making use of those allowances that I've mentioned today, you can save away and put away well over £100,000 completely safe from tax and earn money back from that completely safe from tax as well. All you have to do is pay a little bit of attention, do a little bit of work and a little bit of research, and work out where is best to put your money so it is completely safe from the taxman. It doesn't take too long to do, and by doing this you will eventually save yourself a small fortune in the near term, and over the long term you'll save yourself an absolute fortune. So it's well worth getting in early and sorting this out and doing your research and sorting this out as early as you possibly can. Even if you only have a few £1,000s to start with, later on down the line that'll be tens of thousands, maybe even hundreds of thousands or millions. So it's well worth taking note of and getting it all sorted rather than paying an accountant or financial advisor to do the same, because that's all they're going to do for you. Thank you very much for watching today, guys. Absolute pleasure to bring you this information. If you could smash that like button on your way out and consider subscribing to my channel, that would be awesome. I'll see you in another investing episode. Catch you later.